All right, ready to jump into Prudent Corporate Advisory Services Limited.
Let's do it.
We've got their FY24 annual report, right?
Yep. And the transcript from their Q1 FY25 earnings call?
So basically, we're giving our listeners the inside scoop on Prudent. Think of it like, you're prepping for a big meeting with them.
Or you're considering maybe investing in them.
Exactly. And one of the first things that jumped out at me is their business model. It's not your typical approach.
Yeah, it's a B2B2C market.
E to BDC. Now, for those who aren't familiar with that jargon, what does that actually mean in practice for Prudent?
So instead of going directly to the investor, they're working with distributors.
Okay, so they're the B2B part.
Right. They provide all these technology-enabled services to the distributors.
Got it.
And then those distributors, they work with the end consumers.
There's the C.
Exactly.
So it's like they're building this network of financial advisors, but they're all equipped with Prudent's tools and products.
Right. And it's a super efficient way to scale, especially because they've got such a strong presence in those Tier 2 and Tier 3 cities.
It's something we don't always see with traditional financial institutions.
Absolutely.
Now, one thing that really impressed me going through their materials is the sheer variety of what Prudent offers.
Oh, yeah. They're not just a one-trick pony.
It's not just mutual funds. They've got insurance, stockbroking, NPS, even those newer areas like alternative investments and peer-to-peer lending.
It's a pretty impressive portfolio, and they're not afraid to innovate either.
That Wise Basket product, right?
Exactly. Model stock portfolios with no lock-in period.
I mean, that's a game changer for investors who, value flexibility.
Yeah, it really appeals to a younger, more digitally savvy investor.
Which brings us to the bigger picture. Prudent's operating within the financial services industry in India. And let's face it, the Indian economy is, it's booming.
It's on fire. And sectors like manufacturing are projected for some serious growth.
So how does that all translate to the financial services sector?
Well, when you have a growing economy, you have rising household incomes, right?
People have more money to invest.
Exactly. And we're seeing a shift from those traditional savings methods to market-linked investments.
So Prudent's perfectly positioned to capitalize on this trend.
Especially with their focus on those millennial investors, they're really tapping into that growing segment.
So they're riding a wave of growth in a sector that's already, taken off. But let's be real, with that kind of opportunity comes a lot of competition.
Oh, absolutely. The Indian financial services market is incredibly competitive.
So how is Prudent stacking up? How are they carving out their market share?
Well, they've achieved some pretty significant growth, especially in their mutual fund distribution business. Their assets under management, or AUM, from that segment, it's impressive.
And I'm seeing a lot of emphasis on SIPs.
Systematic investment plans.
Yeah, I know what they are. But why are they so crucial to Prudent's strategy?
They're like the entry point for a lot of investors, especially millennials. It's all about making investing a habit, putting aside a little bit regularly.
It makes it less daunting than, trying to invest a huge lump sum all at once.
Right. And get this, millennials make up something like 45% of Prudent's SIP flows.
Wow, that's a significant chunk.
And the best part, they have higher retention rates than other groups.
Meaning they're sticking with it. They're not just dipping their toes in the water and then running away.
Exactly. So they're building this loyal customer base right from the get-go.
It's a smart long-term play. But beyond the SIPs, what else is Prudent doing to stay ahead in this competitive market? What are their secret weapons?
Well, their digital platform, Funds Bazaar, is a real game changer.
Okay, tell me more about that.
It's a one-stop shop. Their partners, the distributors, and their clients, they can do everything there. Research, transactions, you name it.
It's like a financial command center right in your pocket.
Exactly. Convenience and efficiency all rolled into one.
And, of course, they've got that massive network of mutual fund distributors, those MFDs.
Close to 30,000 of them.
That's huge.
Yeah, that reach is incredibly valuable, especially when you consider their focus on those Tier 2 and Tier 3 markets.
So they've got the digital platform, the on-the-ground network. It's a powerful combination. But we'd be remiss if we didn't talk about the risks, right? Every business has them.
Absolutely. And Prudent's annual report does a good job of outlining some key risk factors.
Like what?
Well, competition, obviously, is a constant pressure. They also acknowledge the potential impact of regulatory changes. Cybersecurity threats are a big one these days.
And, of course, the economy. You never know what's going to happen.
Right. Economic volatility is always a concern.
So it sounds like they're aware of the potential pitfalls. But what are they actually doing to mitigate these risks? What are their strategies?
Well, they're investing heavily in technology upgrades. That's key, especially for staying ahead of those cybersecurity threats.
Makes sense.
They're also diversifying their product offerings.
Right. Remember that financial supermarket we were talking about?
Exactly. That diversification helps spread the risk.
Okay. And appeals to a wider audience.
Absolutely. And they've implemented a really robust risk management framework. So they're actively identifying and addressing potential threats.
It's like they're building a fortress around their business.
In a way, yes.
Now, one thing that caught my eye in the report, and I'm a bit curious about this, is a mention of auditor concerns regarding their accounting software.
You're talking about the audit trail issue, right?
Yeah, that's the one. The auditors flagged a concern that for a portion of the fiscal year, their primary accounting software wasn't fully capturing the audit trail.
Meaning there wasn't a complete record of all the changes made to the financial data.
Yeah, and that's a pretty serious issue when you're talking about financial transparency and, integrity. Did they address this?
They did. They upgraded their accounting software to ensure that a complete audit trail is captured going forward.
Okay, so they took swift action to correct the issue. That's reassuring. But moving beyond the numbers, what about their corporate governance practices? How are they approaching that?
Their annual report actually includes a whole section dedicated to corporate governance. It outlines their board composition, committee structures, remuneration policies, the whole works.
So they're not shying away from transparency.
They seem to be placing a high value on ethical conduct and responsible business practices, which is essential for building trust with investors and stakeholders.
Trust is everything in the financial services industry. Absolutely. Yeah. But let's circle back to that competitive landscape for a moment. We've talked about their strengths, but how is Prudent ensuring its long-term sustainability in such a crowded market?
Well, they're certainly not resting on their laurels. They're actively working to maintain their competitive edge. We've talked about technology adoption, but they're also really focused on operational efficiency.
So streamlining processes, reducing costs, that sort of thing.
Exactly. And they're adopting a very customer-centric approach, putting the needs of their clients and partners front and center.
It's like they're playing a multidimensional chess game, tackling the challenge from all angles.
You could say that.
But what about sustainability in a broader sense? Are they considering the environmental and social impact of their business?
They are. They've actually made several commitments towards sustainable growth,
right,
both in terms of their business practices and their focus on environmental and social responsibility.
It's good to hear. They're not just focused on the bottom line. They're considering the bigger picture.
Right.
So given all we've discussed, what's the outlook for Prudent? What's their growth potential like?
They've set some ambitious targets, especially for their SIP book, and they're constantly expanding that MFD network, trying to reach more and more investors.
They're on mission?
They are, and their digital initiatives are really paying off, attracting new partners and driving growth.
Speaking of growth, their Q1 FY25 results just came out, right?
Yep, and they're looking good. Robust growth in profits and AUM. Definitely a positive trajectory.
So they're on an upward swing. Anything else in the recent news that's worth mentioning? Any big developments?
They actually just completed the amalgamation of their subsidiary, Prudent Broking Services Private Limited, into Prudent Corporate Advisory Services Limited.
So a merger.
Yeah, effective from April 1st of this year, 2023. It brings everything under one roof.
A consolidation of power. And speaking of power, you mentioned that their Q1 earnings call just happened. What were some of the key takeaways from that?
Well, one thing that really stood out was their emphasis on ramping up their insurance business. They see a lot of potential there, and they're willing to, put in the resources to make it a success.
Interesting. So insurance is becoming a bigger piece of the pie. Anything else stand out from the call?
They're also quite bullish on alternative investments. They're seeing some promising growth in that area.
So they're expanding into new territory, venturing beyond traditional financial products. It's like they're constantly evolving, adapting to the changing market dynamics.
They are. It's impressive to see.
I always appreciate that in a company. But before we get too carried away with the positives, let's take a step back and consider the potential risks and challenges that Prudent might face moving forward. What are some of the key factors that could impact their long-term success?
Well, The regulatory landscape is always a bit of a wild card. Any major changes in regulations could have a significant impact on their operations.
Right, regulatory uncertainty, it's a constant concern in this industry.
And competition, of course.
Yeah.
The Indian financial services sector is attracting a lot of new players, both domestic and international.
So they're going to have to work hard to maintain that competitive edge.
Absolutely. They need to keep innovating, keep adapting.
But what about internal risks? Are there any areas within the company that could pose a threat to their growth?
Well, as with any rapidly growing company, managing that growth effectively is crucial. Making sure their infrastructure, their systems can handle the increased demands.
It's like building the plane while you're flying it.
Right. And attracting and retaining top talent is another key challenge. They're going to need a skilled workforce to execute their strategy.
People are the foundation of any successful business. Absolutely.
And, of course, managing their financial resources effectively. Investing wisely, maintaining a strong balance sheet, managing debt levels.
It's a balancing act, isn't it?
It is. You need to be aggressive enough to capitalize on opportunities, but also cautious enough to avoid overextending yourself.
Well, it seems like Prudent has a lot on their plate, but they also seem to have a clear vision, a strong team in place. What's your overall assessment of their ability to navigate these challenges and achieve their long-term goals?
I'm cautiously optimistic. They've got a lot going for them. A strong track record, a unique business model, a commitment to technology, a deep understanding of the Indian market. But those challenges are real. Their success will depend on their ability to adapt, to execute, and to stay ahead of the curve.
It's like they're standing at a crossroads, multiple paths ahead of them.
It'll be interesting to see which path they choose.
Well, I think we've given our listener a lot to chew on. They should have a pretty good understanding of Prudent's business model, their growth trajectory, their competitive advantages, and the challenges they face. But before we move on to our final thoughts, let's take a closer look at some of the specific initiatives Prudent is undertaking to address these challenges and really solidify their position in the market. What are some of the key strategies they're employing?
One area they're really focusing on is building a strong corporate culture. They recognize that attracting and retaining top talent is essential for their long-term success. So they're investing in initiatives to create a positive, rewarding work environment.
Makes sense. You can't build a great company without great people. What are some of the specific things they're doing to foster this strong corporate culture?
Well, they're implementing professional development programs, to help their employees grow their skills, advance their careers. They're offering competitive compensation packages to attract top talent.
So they're not just talking the talk, they're walking the walk.
Right. And they're also focusing on creating a culture of diversity and inclusion.
Recognizing that a diverse workforce brings a wider range of perspectives and experiences to the table.
And it helps them better understand and serve their diverse customer base.
Now, we can't talk about Prudent without talking about the regulatory environment in India. It's a complex landscape, constantly changing, and companies operating in the financial services sector need to be on their toes to ensure they're in compliance. How is Prudent approaching this challenge?
They're taking it very seriously. They have a dedicated compliance department. They're responsible for staying up to date on all the latest regulations, making sure the company is operating within the law.
Like having their own internal watchdog.
Exactly. And they're also proactive in engaging with regulators.
So they're not just trying to avoid getting in trouble. They're actively participating in shaping the regulatory environment.
Exactly. They see compliance as a strategic imperative, not just a box to check.
Now let's shift gears a bit and talk about Prudent's technology strategy. We touched on this earlier, but I think it's worth exploring in more detail. They're making significant investments in areas like cloud computing, data analytics, artificial intelligence. What's driving this tech-focused approach?
I think there are a couple of key factors at play here. First, they're seeing this growing demand for digital services, both from their partners and their clients. People want convenience. They want access to information quickly and easily. They want seamless transactions. So Prudent's building that robust digital infrastructure to deliver these services.
So meeting their customers where they are in the digital realm, what's the second factor?
Well, the second factor is the increasing competition. You've got these fintechs, startups, other tech-savvy players entering the market. So Prudent recognizes that they need to stay ahead of the curve. They need to adopt the latest technologies to remain competitive.
It's like an arms race, isn't it?
It is, in a way, yeah. But ultimately, it benefits the consumers, it drives innovation, leads to better financial products and services.
A rising tide lifts all boats.
Exactly. Now let's talk about something that's close to my heart, data security. With all this digitalization comes a heightened risk of cyber attacks, data breaches.
That's a valid concern. Data is the new gold. Everyone's trying to get their hands on it.
And Prudent is taking it very seriously. They've got a multi-layered security strategy in place. Firewalls, intrusion detection systems, encryption technologies, you name it, they've got it. And they're not just relying on technology alone.
What else are they doing?
They're conducting regular security audits, vulnerability assessments. They're trying to identify any potential weaknesses in their systems. And they're also focusing heavily on employee training and awareness.
Because human error is often the weakest link.
Exactly. They're educating their employees about best practices for data security, encouraging them to be vigilant, to report any suspicious activity.
So they're building a culture of security.
Precisely. And they're also working with industry partners, with regulators to stay informed about the latest threats and share best practices.
Collaboration is key in this space.
Absolutely. Now, let's turn our attention to Prudent's financial performance. We've already mentioned those strong Q1 results, but let's dig into some of the numbers a little bit.
Yeah, let's get into the nitty-gritty.
Well, their revenue growth has been pretty impressive, particularly in that mutual fund distribution business, and they're managing their costs effectively. They've got healthy profit margins.
So they're growing the top line while also keeping a close eye on the bottom line.
Exactly. And they have a really strong balance sheet, low debt levels. It gives them that financial flexibility, to invest in growth opportunities, weather any economic storms.
So they're financially sound. They're in a good position for the future. Anything else worth noting in terms of their financial performance?
One thing that stood out to me was their focus on generating recurring revenue streams.
What does that mean exactly?
Essentially, it means they're moving away from those one-off transactions, and they're focusing on building those long-term relationships with their clients.
So it's about creating a stable, predictable stream of income.
Right. And their emphasis on SIPs plays a big role in this. Those regular contributions from investors, that's a recurring revenue stream for Prudent.
It's a smart strategy.
It is. Now let's talk about growth. How are they planning to expand their reach, capture more of the market?
Well, they seem to be pursuing a two-pronged approach: organic growth and strategic acquisitions.
Exactly. So organic growth means expanding their existing business lines, increasing their market share, attracting new customers through their current offerings.
So building on their existing strengths.
Right. And then you've got the strategic acquisitions. That involves acquiring other companies, that complement their existing businesses or give them access to new markets or technologies.
Like a shortcut to growth, isn't it?
In a way, yes. And they've been quite active on the acquisition front in recent years.
Any notable acquisitions come to mind?
Well, the merger with their subsidiary, Prudent Broking Services Private Limited, is a good example. That really expanded their stockbroking capabilities.
It's like they absorbed their younger sibling and gained all their superpowers.
That's one way to put it. And they're continuing to look for potential acquisition targets.
So they're not done growing. They're hungry for more.
They are. And that growth mindset is attracting investors, those investors who are looking for companies with strong potential.
It's like a self-fulfilling prophecy. The more they grow, the more attractive they become.
Exactly. It's a virtuous cycle.
Okay, so we've covered a lot of ground here. We've talked about their corporate culture, their technology strategy, their financial performance, their growth plans. What's your overall assessment of the company?
I'm impressed, honestly. They seem like a well-managed company with a clear vision for the future. They're adapting to the changing market, they're embracing technology, they're prioritizing customer satisfaction, and they seem to be aware of those risks. They're taking steps to mitigate them.
I agree. They're not just chasing profits, they're building a sustainable business.
And that's something I always look for.
Me too. Now, before we move on to our final thoughts, let's take a step back and consider the broader implications of Prudent's success. What does their growth trajectory tell us about the financial services industry in India?
I think it tells us that the industry is ripe for disruption.
Okay, unpack that for me. What do you mean by that?
Those traditional financial institutions, they're facing increasing competition from, those fintech startups, those tech-savvy players. And Prudent's success shows that it's possible to challenge the status quo. You can build a thriving business by embracing technology, focusing on customer needs, adapting to the changing market.
So they're not just a success story in their own right. They're a harbinger of change for the entire industry.
Exactly. They're showing the way forward.
It's an exciting time to be in this industry.
It is. So much innovation, so much potential.
And Prudent is right there at the forefront.
They are.
Well, I think we've given our listener a pretty thorough understanding of Prudent Corporate Advisory Services Limited. They should be well-equipped to, analyze their business model, assess their growth potential, make informed decisions.
I think so, too. We've covered a lot.
And now it's time for our final thoughts. What parting wisdom do you have for our listener today?
I think, given everything we've discussed, the key takeaway is this. Prudent success is a testament to the power of adaptation.
Adaptation?
They've shown that it's possible to thrive in a rapidly changing industry by embracing technology, by focusing on those customer needs, by constantly evolving.
It's not just about surviving, it's about thriving.
Exactly.
Well, that's a perfect note to end on. Thanks for joining me on this deep dive into the world of Prudent Corporate Advisory Services Limited. It's been a pleasure exploring their journey with you. And to our listener, thanks for tuning in. We'll see you next time on The Deep Dive.